here.
The bet that resonates in
Everybody's
from
talking
dais to dais, jurisdiction to jurisdiction.
They're talking about it. There was a presentation that Neil did at Carr, and I got phone calls afterwards like, "What's going on with this mustache bet?" So, look, it's a bubble thing. You know, it's going to be close. It's interesting. I received phone call. I'll leave names out of it from some assistant chiefs and chiefs on the FD. Fire department wanting to know what my opinion was of it and so forth and so on. So it's getting out there a little bit, but
I just put it out in the Twitter sphere.
The opinion on the upzoning?
Yeah. I prefer the term rezoning.
You hate the word upzoning. You've always hated the word upzoning.
Hate's a strong word.
You've always disliked the word upzoning.
I think it has certain meanings to it.
It has negative connotations.
What they are doing, what they technically are doing, is a zoning rewrite.
Yeah.
So that's technically what they're doing. It just happens to be going upwards in the density. They could do a zoning rewrite and decrease the density, but
which has been done.
It has been done.
Has been done.
Well, and I think the argument with the PD, with the FD, excuse me.
You're talking the fire department.
Fire department.
Okay, thank you.
I'm still trying.
These acronyms in the morning.
Sorry.
So challenging.
Sorry.
I'm on my second cup of coffee.
And I'm sipping my first one.
Okay.
And I had a bike ride this morning. So I'm a little
You've been working on your tan. We should get the cameras on. Keith's been working
working
on his
my tan.
I mean, you seem to always be tan. I've often wanted to ask, and maybe I will ask it on the show, does he utilize a tanning bed of any capacity? Why don't we save that for when the cameras go on?
Great, thanks.
Do you maybe he does over here.
What is this, beat up on Smith?
No, we're not beating up on you. I'm giving you props. You're bronze.
Well, I happen to think I'm a little
pasty?
Let's say the Irish in me is coming out.
Oh, okay. All right, no. Okay.
The Italian comes out in me in the summer. The Irish comes out in me in the winter.
That's how I feel. Although I have no Irish.
I was about to say.
Just Cuban. All right, J-Dubs.
There might be a little Irish in there. You never know.
I married an Irish woman. I think she's watching. All right, we'll rock and roll, J-Dubs, when you're ready.
She got a temper?
Nah. Nah. She's the best. Good Wednesday morning, guys. I'm Jerry Miller, and welcome to Real Talk with Keith Smith. Thank you kindly for joining us. A show presented by Ross Mortgage and Scott Morris, guys. Ross Mortgage is really helping quite a few friends, family, quite a few people, couples, you name it, get to the closing table by financing homes, investment properties, construction loans of their dreams. Scott Morris and Ross Mortgage. Judah Wickhauer, our director, and if you had a microphone live, and I guess we do before the show starts, you'd hear a lot of backroom chatter before the program begins here on the set of the I Love CVille Network. Keith Smith is a good guy to chatter with. He's got a bet going on that you're in the 90-day window. Was it the 17th of June? I think it was the 17th of June for the mustache bet.
So, Scott, how's life going? How's things going?
I am just happened to be reading this article that the Daily Progress put out about the dude from the Planning Commission and the Quality Pie people.
Does it talk about a mustache in there?
It does not. It does not. But there's some hot fire stuff in here.
Rory Stoltenberg's come on the I Love CVille Network before, the Planning Commissioner, and a little bit of crossfire in the local newspaper with some comments he made on Twitter about Quality Pie and its owner. Anyone want to touch that story?
Quality Pie?
Sure.
Yeah.
The old Spud Nuts location.
Yeah. Basically coming on and saying that, they objected to the affordable housing project that was going in at the time, and then he put out a tweet saying that anybody who objects to affordable housing shouldn't be able to apply for subsidies, and now the dude from Quality Pie was saying that the Planning Commission's trying to running them out of business. I think that takeaway kind of is they didn't want something happening close to their business, and that they got into a little personality. I think there's more personality than actual.
Well,
impact
usually
on
that's
either
what
one.
that stuff is, isn't it? Right? At the end of the day, it's a little bit of interpretation of a situation. 72 homes came on the market the last 96.
I
This is important. 72 came on in the last.
You would not touch this. I figured you would not touch
76.
This. We could save it for the I Love Seville.
You
show
know,
if we need to.
you know what? I'm boxing a corner. Mustache.
Yeah.
Yeah. What's the mustache thing?
You don't know the mustache thing?
I know there's a bet. I know it has something to do with zoning, and I know
Okay.
that.
Well, it's kind of about what you just read, right? So what it's about is the city is in the middle of doing a zoning rewrite, AKA upzoning. Certain
Thank
folks
you.
like to use
Thank
that
you.
terminology on that end of it, but it's they're doing a zoning rewrite. This has been a long, drawn out process. Slog. It'll continue to be a bit of a slog. But what they're doing, in nutshell, is they're looking at all the zoning ordinances and seeing where certain areas can be in density increased, so forth and so on. Different product types. I use the term missing middle, so I'm going to be looking at that. I don't have the exact, and you might want to tag Neil because he'll quote all this stuff.
Okay, I'll get Neil in the mix.
Majority of it is in the yellow area of the flum of the map, which is single family detached, which they can potentially do duplexes or quads. I think some of the concern is they think that the whole city can go multi-story, mixed use, 4 or 5 stories, hundreds and hundreds of units per street or block, and it's only a certain amount of areas that actually can do that within the map anyway. But the bet is, I bet Neil Williamson that on June 19th would be the what is it? Come on, not the high low. What is it called?
the drop.
The over-under.
The over-under. Thank you.
Over-under.
The over-under.
Over-under.
If it gets approved before June 19th, I'm shaving my mustache off live in front of whoever should be watching that. I've had this on since 1985.
Neil was shaving it.
No, I've never. Dude, stop spreading that rumor. I've never. It's got out there.
I know it has.
It's got out there. So stop it. You know all this influence that we all have here. Stop it.
Yes. Bill McChesney, not a fan of future land use map and
Yeah.
upzoning. We've covered this quite well. I think I've made a very convincing argument that upzoning is not going to breed affordability. I've made a convincing argument that affordability certainly not will be birthed in the near future.
That's for sure.
We have serious headwinds that are going to impact affordability, like 5% of Albemarle County being allocated to development, commercial and residential. We've talked about this ad nauseum on the program. I just don't see any positive impact from this from an affordability standpoint. Will it create more people living here? Yes. Will it get more beds? Yes. Will it get more rooftops? Yes. Will they be affordable? No. Will they lead to wealthy investor speculation on said land? Yes.
Yes.
So
Yes.
it all depends on how they structure these ordinances, right? And if you, in certain areas, if you're going to use this type of product or home or multifamily or if you want this density, you're going to have to produce a certain percentage of affordability. I'm confident that's going to get written into the ordinances, but we're a long way from that. I mean, they're on the first module of 3 that has to get put together prior to the infamous mustache bet on the 19th. I think it's going to be close. I think the political winds there at the dais is that this is going to happen. When is the question?
Yeah. I mean, I have no doubt this is going to happen. Yeah, Bill McChesney, the speculation has already begun. You're absolutely right.
Yeah.
We talked about that with Grossman's properties.
Yeah.
Tim Carson's got a couple of listings off
Speculation of people buying. Without doubt.
off JPA. Yeah, it's outside folks of the community buying this land.
Absolutely.
I want to get Scott Morris in the mix for the first highlight clip. Judah Wickhauer We had some interesting macro data this morning. ADP private payroll up higher than expected. Another sign that Powell's going to have to potentially get more aggressive and hawkish when private payroll reports are going higher than people thought. We've cracked a number of thresholds as we talked before the show. I'll let you relay that to the viewers and listeners. Chair Powell is speaking on Capitol Hill now, like literally now here.
Yeah, and he spoke yesterday. I think the takeaway for the last 24 hours really has been they have not been as hawkish as expected. This jobs report, although not the job loss that the markets wanted, still isn't as bad as I think what was expected. So we're seeing a little reprieve, or at least some unchange in the bond market, and mortgage-backed securities are kind of flat level as well. I think a lot of this is going to be more reliant on the jobs data that we get this Friday. Much like I said a month ago, when there was a really positive an ADP report that showed some job losses, everything responded really well. Then that report just got laid on its back 3 days later. So I really think the end of the week is going to be telling to what we see happen in the bond market and mortgage rates. But right now, we're at least even keel, and that's what we want. We need some more regularity. We need less volatility, and that's what's going to drive more activity in the market.
I got a follow up to this, and then Keith, jump in here. How are rates responding? How are we seeing clients with what they're locking in here? We're over 7 in a lot of circumstances, are we?
No, we're not over 7 in a lot of circumstances. We're in the 6s for a lot of circumstances, and for some, depending on what your scenario is for personal credit or the complications of the property, meaning a double wide cash out refinance, probably you're gonna be paying upwards of 7s there, or an investment with a DSCR loan where depending on the risk and complications, you'll be in the 7s, but we're still pricing a lot of the majority of things in the 6s at this point.
So
mark that there, Judah. Go ahead.
So I was asked this question. I think we did it on Monday. Somebody asked on the feed.
Yeah.
We can clearly say, I can say from our side of the table, we have multiple buyers. We've lost one that had 30, you helped us with, that had 30 transactions, 30 offers on the table. We've lost cash deals to finance deals.
And this guy's losing deals here. This guy has buyers. Keith has buyers and nothing to buy.
So I'll say that not just from you and not just here, but
it's all over.
In all over, I'm starting to hear, see, and the words appraisal waiver are filtering back into the conversation.
Dude, he was saying that Monday. That's terrifying.
And that's Northern Virginia.
I actually think
Richmond.
From a buyer's perspective, it's interesting. The psychology of the buyer, and this is where I would love feedback from you, Scott. The psychology of the buyer, interest rates are not impacting their decisions.
Keith Smith made the statement, backed it up with a legitimate argument, and I think he's very right, and I agree with him, to the point where we're having a conversation after the show about this, that this might be the best time to sell a piece of property in the last 20 years of Central Virginia real estate. He's been in the game since 87.
Let's quantify it.
Okay.
Right? It's got to be in the right location.
Yeah.
We've got to price it right.
Right.
Though that's a difficult thing to do.
Right.
And we'll talk about that here in a minute. I'm having appraisers from outside the area calling me going, hey, help me justify this sale. Right? Apparently they watch the show. Help me quantify this sale. But it's got to be the right price. Help me quantify this contract price. Because 2 months ago, it was a different number. Got to be the right features, right conditions. Timing is what we're talking about, and who's on the other side matters. And I will continue to say that until you put me in my grave.
Yeah.
But that's the stop smiling. That's the real estate. But is your tempo decreasing or increasing? Are people coming to you saying, "Hey, give me a pre-qual letter. I'm trying to make a play for a home"?
So it's a smaller pool, but it's more competitive inside of that pool.
Yeah. I would agree.
So and that's what we're what's causing the issues that we're seeing is the people who are out here who are having to act are needing to. It's not a whim. They're making a decision based upon some life event
Yeah,
that's occurring, and they have to be somewhere else. If they're selling their house, that's fantastic. But if they're buying, it's making for a challenging situation.
So what's happening here in the last few days, we're getting more phone calls about list our house, which is great news, right? If the numbers are not telling us that, there's 72 that came on the last 7 days, 96 went pending. The same Monday a week ago, 68 came on, 73 went pending. So our pendings are jumping. This is what's happening. The inventory is starting to turn at a pretty quick pace on it. And if I take a look at what pending in the last 7 days, when you start looking at triple-digit homes going triple-digit days on market, going pending, and there's a lot of them. There's 15 of the, hold on a second. Yeah, there's 17 of the 96 were over 3 digits. A lot of 90s and 60s on that event. That's just telling me that they're just ready. People are just coming in and buying and putting contracts in it. The question on Monday that I wanted to get to was, let's assume you're not right. Let's just assume we're not going to get sub 5 or somewhere around 5 by the end of this year. Let's say it goes up to some number. What is too much to stop this? When does that impact?
What is too much to stop this?
And by too much, he's talking interest rate.
Thank you.
Yeah.
I know you know that. But I meant to for the listeners.
For those
apologize.
listening, what he's saying is, how high would interest rates have to go to really put things
Diminish demand.
in park?
Diminish demand.
I would say
I'm not even sure we can answer that.
I bet
pool
you
just-
that
the
if
pool
we
just
got
drops,
to
that's
10%, that if the mental barrier
Of the double digit?
freak out. Yeah, you put a 1 and a 0 together out there. I bet.
Yeah, I think that becomes a psychological thing.
Would have some feelings.
So what
People
happened?
already have some feelings.
So
But
what?
it's not
so what happened?
impacting the buyers.
So what happens? This 30. By the way, it was total of 50 offers on this house.
By the way, I hate this conversation.
Okay. So how's the chick?
How high do you think? Yeah, no. I mean,
Okay, how about this question?
No.
No,
How
we
about
got some
let's
mortgage.
talk
We got
about
some loan
chickens.
officers watching. I want to
Let's
get
talk
his
about
take
chickens.
for the loan officers watching the show here. Are you ready for this one? Keith said, and this is sizzle reel, waiting to happen, Judah. Keith made a very convincing argument that this is the best time to sell a piece of property in the last 20 years
It's been a while.
in Central Virginia. He's been in the game since 1987. So he's been in the game
Again, you got to quantify it, Mr.
36
Miller.
years. I will.
In the right location.
If it's priced well, the right location,
Right features.
right features, condition,
Yeah.
and you're represented by someone who's savvy and experienced, he said this is the best time to sell a piece of property in the last 2 decades. Your take on that?
Okay, I agree with that. But I'll go a step further and I'll say that if you are someone who wants or is in the position to buy, this is also at the moment the best time for you to try to do so if you can do so, because we aren't solving this inventory problem anytime soon. And if we have rates come down, while we will get more, that should allow for more properties back on the market as people make that mental break to come back in. It's also not going to affect valuation in a negative way. We're going to continue to see property values increase, and where 24 months from now you may be able to refinance to a lower rate, be paying more for the same house, and you have zero equity because you would have dumped another 20 grand into some landlord's pocket.
So I had a question yesterday from
Mark that. That was good, Scott.
I had a question yesterday from a buyer. Why should I buy in Charlottesville now? Why is now the time to buy in Charlottesville? It was wrapped around some of the conversation we had on Monday, but mostly around.
You know what that was alluded to? The conversation that
Yeah, so of the recent shootings and so forth and so on.
Oh.
But it was
doesn't want to talk about that. I know Scott
we
doesn't
knew
want
that.
to
We
talk
knew-
I'll talk about that
Will
this pie chest all day long
And
before I
chickens.
even dip a toe into that.
We haven't gotten to chickens yet. We got to get into chickens. I'm trying to buy him a stuffed chicken on Amazon. I can't find one. So anybody who's watching and listening, I want to bring a stuffed chicken and put it in.
That's a great idea.
because we always
It's a
go to
great
chicken.
idea.
But it was very quickly dismissed that the safety issue. It was all about, well, am I buying at the top of the market? I said, look, time out. You want to buy a single family detached home? Here's the math. It's really simple. Last 2 months, if you would have bought the first 2 months of 2022 versus now, you made 8%. 12 months, you made 8%.
Well, he sent me some information just for consideration from January until March. Charlottesville appreciation in those 2 months, was it 5 to 8%?
8% is the math I got.
Yeah. January to March.
Yeah, first 2 months. The first month, and that's a single family detached, is exactly 8% year over year. Attached products and condos a little bit differently, but I just took
Yeah.
a snapshot of that. We're up 8%. So if you buy now, you know, you will. I am so comfortable. You're going to be somewhere between minimum 3 to 6% year over year. That it's the inventory simply isn't going to come online, even with this flum stuff, right? That's years down the line.
Oh,
Years, if not decade.
decade.
right.
If not over
Right.
a decade.
Because,
Yeah.
all right, let's say that you get the zoning stuff happens, then by the time
Somebody's going to sue, without a doubt.
and by the time you actually get a project approved, because that's the other piece, that you can go buy up all this land and property that you want. By the time you get the project approved and then get the infrastructure in place and break
Financing,
ground,
engineering.
the results of this June forecast bet is still 10 years away.
Yeah.
Super optimistic. It's 5, but it's somewhere between 5 and 10. It's just going to take that long. They don't. Once you get the zoning done,
You get
then
a couple little projects done, but
Yeah,
by the time. But what people are really concerned about, as far as like
There's
the
huge project.
change of the cityscape and vision and everything else, you're a decade away.
yeah, we can go buy a house. We all can get together, buy a house in 10th and Page area or Fifeful or whatever it is. Sit on it for a little bit of while. When it comes back in, we can.
Because some of those people buying that land want to sit on it, turn around and sell it to somebody who's going to be who actually has the capital to
To make the
create
project a reality.
Bingo.
Jamie Turner watching the program. Jamie Turner's referred some business to Scott and Ross Mortgage. He speaks highly of you often on social media.
Thank
Jamie
you.
Turner.
Thank you, sir. Appreciate you.
He said, to Scott's point, I've heard from an inspector that inspection waivers are back in some places locally as well.
So
Explain inspection waiver. Explain that for the folks watching.
yeah. So I kind of. This is a great segue into what we're going to do on the 22nd.
This is crazy. This is happening again.
Yeah, but if people have been watching us talk, I think we all kind of predicted that we were going to get here, and interest rates are not going to impact it, right? I think a double-digit interest rate will take that 20-foot depth of buyers and of a pool and maybe cut it down to 10, but there's going to be buyers there.
The likelihood of a double-digit rate is not great. We should quantify that.
Well-
We're not going to hit. I mean, I don't want to speak for the professional
Again,
here.
I
You're
believe
the
that
pro.
we're trending down
Yeah, yeah.
at this point, but
Time will tell.
time
Every
will tell.
one of the half a dozen or more 40 and under buyers that I'm talking to, interest rates not even on the radar of the conversation. It's about where am I going to buy and can I get it at the right price? That's it. And they're even getting to the point now, as to Jerry's point, of waiving home inspections. There's one that we lost.
People are buying homes now again without having inspections or getting inspections done just for the sake of their peace of mind, but not utilizing the inspection report in any negotiation capacity.
So
That's
it-
happening again.
and
So-
waiving appraisals.
Yeah, and waiving appraisals.
Well, let's talk about that, because I can't walk in there with a 5% down and waive an appraisal. You've got to
So,
talk about how one does that.
I mean, in theory, you could. Assuming that there's money available that, all right, so
The
let's
buyer's sitting on stacks of paper.
yeah, they
okay.
wanted to put the minimum amount of money
Yeah.
into the loan,
Finance
but
enough.
still held enough money to pay the overage should that come up. So in theory, yes, it exists. Typically, does it happen? No.
Yeah. Normally, somebody's going to. You're 100% right. But we're getting into something that we're going to do on the 22nd, and this is a good segue into it. So we're actually. I'm working on a show. Scott's working on a show. Jerry and Judah, and we're working on doing a show on. Look at that. How you like
I'm
that?
working on the show. Okay, I like it.
Well, what I mean by that is Smith comes up with the idea,
And we
and you guys do.
we figure out how to make it work.
Yeah. So that's working, isn't
Yeah,
it?
it's working. Totally.
I'm the idea man, baby.
Yeah.
That's right. So
This is the idea, man. We're going to have a Christmas party in your studio. It's going to be 6 to 8 people. We're not going to use food or any booze. We're not going to need the hallway, and we'll only rotate one guest in the mix. But hey,
we had 30 people,
we had
lots
a lot
of
of fun.
food, a lot of booze.
had a lot
well,
of
that's
fun.
what's going to happen. So we're going to call it How to Win. We haven't figured it. I'm brainstorming the title of the show, but basically how to win in this market, right? From a buyer and a seller's perspective. And Scott's going to be sitting here. We're going to rotate. Not 30 people, but we're going to rotate certain folks through here. Home inspector. We're going to have Woody Fincham that's going to come on.
Big shout out to Woody.
He's watching right now.
Talking to him last night.
Woody Fincham says waiving appraisals and home inspections is bad juju.
So the reality of it is totally 100% bad juju, but how can we set up our buyers to be successful and A, win, and B, protect them? So one of the things is we're going back to the point, and I saw this when we were looking at this home with multiple 30 offers had on the table. It was a rotating agents in and out. Agents were bringing their home inspectors with them, so they were doing.
Agents were bringing their home inspectors to the Richmond open houses?
No. This was we had a scheduled showing. This was a different home.
But still.
Yeah, well, that's a great hack. And that's what we're going to talk about, because in order to win, you're going to, and if it's in the right location, right price, right features, right condition, it all comes down to how much and the minimizing your contingencies, right? So if we're going to waive home inspection, the best way I know how to protect it, because we were doing this the last time 6 months ago, we would just bring Alex Rayfield in. We would coordinate the showing. While the showing was going for an hour, myself and Alex, I'd bring another agent with me, so the agent would walk the client through the house, and Alex and I would walk around.
Are the buyers paying additional money for this?
The way we've been doing it, we're footing the bill.
Okay.
But yeah, and there's a possibility, and we'll get Woody to chime in on it, because now what's happening is because the prices are accelerating so much, they're going over asking price. Am I paying too much? So Woody can potentially get involved and help pre-contract and do a desktop for a fee, I'm sure, for a desktop analysis. Say, yeah, you're about right. But I have appraisers calling me every day now going, tell me how to justify this price.
Johnny Ornalis, thank you for sharing the show. Jamie Turner says, Alex is my inspector.
Yeah, Alex, good people.
Good people, Alex.
He's also a structural engineer, which is why I love him.
Yeah, one of the trusted advisors Keith speaks highly of. Scott, your thoughts on this topic?
So I said that when everybody's wishing for lower rates, that this would be the first thing to show up, and we didn't even have to get there for it to, due to the fact that we just don't have enough inventory turnover, and we got a lot of humans, man. That's the problem, and we're in a growing area. That's part of the concern. So when you look at nationally, I think we don't see the appreciation and value that we're seeing here in this area, but that goes to speak to what we talked about at the beginning of the year when we were kind of really going through it last year. What do you foresee for the future? It's like even if we're not recession proof, but we are certainly in a growing area that's
recession resistant,
supported by
insulated.
both the university and the alphabets, the NGICs, the DIAs, and these and government money that keeps us insulated from those things. But along with that insulation, there's an affordability concern throughout the area as well.
Well said. Nice.
Yeah, and there is no magic wand or magic bullet. There's a magic buckshot or a silver buckshot to go ahead and do this. Speaking of which, I spoke to Robert Liberty over the weekend, and he told me to stop doing this. But
I love Robert Liberty. Let's get him back on the show.
yeah, he's retired now, and he's him and his partner are wandering around the country trying to figure out where he is difficult. But I'm very happy for him. He's in his retirement stages and enjoying life at this point. So what I'm trying to do real quick as we're talking is I just want to take a look what's going on in Augusta County on the other side of the hill, the first 2 months of this year versus the first 2 months of last year. So I'm going to let somebody chat a little bit while I look at these numbers.
What do you make of this topic? Kevin, I always try to get one of your comments in the mix. We appreciate you, Kevin Yancey. He says, talk about how we have the lowest unemployment in 50 years.
Yeah.
Consumer spending is humming along, regardless of where it's coming from, credit cards or cash, yet everything is going up. Explain how this is working.
Well, I think that we don't really have the lowest unemployment in 50 years. I think we've got a miscalculated number from a large portion of a gig economy and people who have stepped outside of the employment cycle itself that are no longer scored in the process. I think you've got a fraudulent number that the government likes to put a skirt and some pom-poms on and cheer for. And it's just not reality. And as we move further down this road, your DoorDash and your Uber and everyone that is in that form of income, they don't qualify for the employment cycle. They don't hit those numbers. They're not graded the same, but yet they are a massive amount of our economy. So that's why you're seeing what you're seeing, because it's not real. Just like some of the numbers that were pushed into last month's job report were numbers from the third quarter of 2022. Like, it's fraud, bro. It's not real.
A little lipstick on the pig, propped up for some political capital, undoubtedly. And to Scott's point, a lot of folks not just hard to peg from an employment standpoint, but a lot of folks underemployed as well. And I think that's something that is flying under the radar. Keith has made the argument, until we start seeing some serious pain from a job standpoint, we're going to keep dealing with Jerome Powell over and over again.
Yeah, I mean, that's just historically, everybody thinks, depends on where you're at in your life. Some folks at the moment may be in a recession, right, on it. But until employment starts ratcheting up, and you're not wrong, Scott, right? How, there's lies and statistics, right? As far as I go, and how they go ahead and chop them up is one open for interpretation.
Mayor of McIntyre agrees with Scott. He says that's spot on. Mortgage Morris regarding unemployment. The government boots people off the unemployment rolls and then shouts unemployment went down. So giving props to Scott on what he just said.
So if you bought a home in Augusta County the first 2 months of 2022, it is now up 5%. It's up $13,000, single family detached. The number of units have dropped, a big number, 42%. So it went from 56 homes that closed in the first two, these are single family detached, no new construction, the first 2 months of 2023, and the first 2 months of 2022 were 97. So it's a 42% jump down, a reduction, but you went up 5%. So you bought a home in Augusta County in January of last year, you're up 5%.
Buy a home anywhere in this area, it's going up in value.
It's just going to my 3 to 6 to 10%. You're going to see that number tracking in that range throughout the year. I don't think you're going to see double-digit gains. Maybe certain areas might, but I think across the board you're going to be looking at that kind of
Kelsey Klein on the feed for Scott Morris. Does he expect rates to get higher than where they are now in the short term?
In the short term, like I've said, I think we're trading inside of. We are near the ceiling, but we've kind of been in this. We get some good news, things get dramatically better. We get the same news we've been getting, and things get back to where they are. I'd love to call this like a technical ceiling, but it wouldn't take a lot. I think a combination of the next Fed meeting rate hike and still continued sticky inflation, and we could go up a little bit higher. But I don't think the market wants it. I don't think investors want it. The appetite there overall just does not appear to be there. Everyone wants to move in the other direction. They just want the news to do it with.
So week over week, we're kind of flat with new units coming on. We're substantially up on pendings, and we're at 6 or 7%, depending on your credit score. We go down to 5 or sub 5. I don't know. I mean, I keep on throwing this question out.
Well, I think that's what and can sustain that. If we go down and we are in a sustainable level, I think that gives people the comfort of knowing that they can list their home and not watch the market move a full percentage point from the time that they put it on market to the time that
So
they're
you think
trying to buy
that'll
something
actually
else.
help listings?
Absolutely, yes. I think we certainly go through a period where
You
people
think otherwise?
It's just, I just think the pool of buyers is so deep. We've got to get inventory to go up so high. I'm not so sure it'll help.
I think you need more stability in order to get there. If I were making the decision from a want not versus a need, I would want to know that when I do this, I have a good idea of what it's going to look like on the other side, and not exposing myself to more risk. And I think the more that you can stabilize rates and less volatility, the more likely you are to get more inventory.
We've known each other a very long time, and I have to tell you, every time I sit here on a Wednesday, I walk away with a little bit of knowledge. So thank you.
Thank you. Me too. I mean,
Walk away a little bit smarter. Most of the people that know me know that doesn't take that much for me to get a little bit smarter. But
Johnny Ornalis share the show. He loves the commentary,
Hey,
the
Johnny.
conversation. Woody Fitcham, your thoughts on this? Fitcham and Associates watching the show. KTP, Katie Pearl, what do you think on this? Jump in on the feed. Let us know.
On Wood, a question for Woody. I've been meaning to ask him that the last 48 hours. I'm trying to understand why appraisers are calling me to ask me about valuation. I love his opinion on that.
Well, I mean, because it's moving so quickly.
Yeah.
I know why I call them. I call them to complain about valuation. I'm kidding. That's
It's
not.
moving so
Well,
quickly.
Well, no.
So-
Lenders aren't supposed to contact appraisers. It's a joke.
He's joking. He's
We
joking.
want to quantify that.
He's
That was a
joking.
joke.
We got it. We
He
have
does
to,
not do that.
We have to emphasize jokes on the show from time to time, evidently.
Mainly because mine suck.
He's joking. No, that's not why. That's not why. He's
Well,
joking.
they're dad jokes. Sometimes you got to explain dad joke. But you're on point though, because the question is, to me, I had 3 appraisers on 3 different properties that they were looking at in our region, and the question is why did the agent? How come the agent got the listing price so wrong? How come we're so high over?
Well, you're starting to see, to your point, you're starting to see on the interwebs people saying the strategy is list low and then get multiple bidders and drive the price.
I don't think that's what it is.
I don't think that's it at all.
No.
I think the market's moving that fast.
That's exactly what it is.
Yeah.
And the mentality of agents, or the way certain agents were taught, you look back 60 days, 90 days, 120 days. You got to look back 2 weeks. You got to
Right.
look back 3 weeks. The market is moving that fast. So if I'm putting a piece of property on the market and I'm looking at 0 to 6 months, my numbers are going to be off. I got to look at what's happening. And then the problem is, which is why I got the phone call, we've got no comps in the last 2 weeks or 3 weeks. You know, what is going on in the market?
I mean, I think that's a great description of what's happening.
Yep, that's pretty much
I
it.
ask this question often. Scott and Keith, is this the most difficult time for a first-time home buyer?
Not yet.
Wow.
Well, so
That was ominous right there.
Well,
I
not
mean,
yet.
what I mean by that is this.
do you think that 5% lower will make it harder?
I think that
Well, or do you mean not yet because rates are about to go up higher?
no, I think it's a combination. All right, so
You're getting hit on both sides here today.
sure, but
He likes it. The questions.
I think
That's what I
that if rates were to start when rates start to fall, and we're still trapped in this inventory problem, I think we will go through another period, being that we're already dipping our toes into appraisal waivers and home inspections and waived and all of these things.
I don't think we're tipping our toes. I
That-
think we took a dive into the pool, brother.
Shush. That because it depends. It's about the property. It's about the property. If you're on the super clean, like if you like it, everybody likes it property, then yes, you're in that 30 offer situation and back to all these things. But I think there's definitely some distressed, deferred maintenance properties that
Absolutely.
a first-time home buyer can go in and get a deal on, and maybe look at a renovation loan and do some things that
And
that really
everybody's
check all the
expectations
boxes.
of where is going to start changing.
But as far as to the original question, is this the most difficult time in saying not yet? I think that if we were to see a decline, when we start to see a decline in rates, we will go through a period where, especially if it's the right time of year, and with a compressed amount of inventory, that it could be more difficult. But the bottom line is, if you are somebody who, as a first-time home buyer, who can make a well thought out decision, and you're not looking to buy the perfect property, you're looking to buy a property that you can make perfect and then sell for some equity down the road, I think there's still a lot of opportunity out there.
So it may be the most difficult time, but I'm more excited now about real estate than I have been in decades. And it's because of the conversation. I swear to God, it's because of the conversations I'm having with the buyers. And they've gotten to the point that
They're realistic.
they're realistic. They trust what you say to them.
Yeah.
Right? They listen to their
Stay out of your
trust-
way.
No, but they come along with us, but they listen to their trusted advisors. And they put the phone I'm holding in my hand down. I've been saying this for years. And then they may use this on Realtor.com to find whatever they're looking for, but now tell me how to do this. And I love it because we get to coach buyers, what we're going to do on the 22nd, coach buyers through the process. We set expectations. We're going to go through this a couple of times, guys, before we get there, right? But we'll get there. I'm hearing back from the buyers, I'm so glad I'm part of your team. So far, they're talking about Yona actually, but so part of the team on that end of it. So I'm excited because people want to seek advice, and that's kind of where I love being.
This question's coming from the feed here, and this is a good one. This is from Kyle, who I would imagine has 4, maybe 5 investment properties locally. He asks for Scott specifically what he's seeing across his desk from investor activity.
Depends on the location.
6 properties, he says.
A lot of activity in the Richmond area, because I think there's a lot more in the Petersburg, some surrounding areas that support a better entry point price-wise for investors there than here. I think in the Charlottesville area, the price is challenging, at least personally from what I've seen. Not that it's not that nothing exists. It's just that it's harder to find something to make work.
Well, the ROI needs to flush out, right? The return on investment needs to flush out. When you're over a certain dollar amount, it's just your dollar amount versus your rent just isn't going to work on that end of it. Where you're at a more affordable price point, it flushes out. Still 20% down?
Yes.
Okay.
203K loans getting difficult to qualify for? That question's on the feed. You want to touch that one?
Difficult to qualify for?
Yeah.
No, that's not an issue. Really just finding, and I highly recommend them to the realtors that I work with and borrowers. I've got a team of people from HUD consultants to contractors who get it and can get in walk in the door together. That way we meet our expectations on the first visit about what this is going to cost and how long it's going to take and how we're all getting paid. It puts in place a plan that can get someone in a home that would probably have a more difficult time buying that same home once completed if they were trying to buy it right at, from the start, as opposed to going in and finding something that has a little deferred maintenance, that is a little distressed, but has a good plan to turn it into what they want it to be.
You're going to see a pretty substantial growth, I think, in 203Ks here coming forward.
Why is that?
Well, it's to the point that Scott said. What's going to happen is buyer pulls in it. We're definitely in the spring market. We've been in the spring market for quite some time, AKA whatever one might define as that. Buyers are coming in. The inventory's not picking up. To Scott's point, we're going to start looking outside of where we originally wanted to be, and the features and conditions might change, and that's when 203 comes in and say, okay, guys, we maybe not be at the right location. It's close. We hit the right price. We've got to work on the features and conditions. Scott's got this program that we can use that has the connections and the right people that we can go ahead and do this and make a couple of repairs, and then you end up with increased value on the property. The trick is just to make sure you don't overbuild for the market, going forward. That's the tricky part of that. But we have team members to help you.
You have RG, Roger Crawford, on the show, and he says, are the cash buyers, not investors, are they back, and how do you quantify their force? Interesting question. Who wants to touch that?
I don't see cash buyers.
Keith?
So we have cash buyers and lost to finance deals because the cash buyer did not want to go up to a certain dollar amount. Did not want to waive a few contingencies, and we lost to finance deals. We had actually 2 of them over the weekend. We reset expectations. We're going to go back at it again, but we lost to finance deals, 2 of them. That's not a normal occurrence on that end of it. Usually cash is king, and usually you can negotiate a little bit better, but it was about the other terms, and they went way over asking than our buyers were prepared to do it.
Friends asking for the routine Lake Monticello update from Keith Smith. How about a little holler at Dan Pettit watching the program over there?
Is that Dan asking for that? Yeah, so we can do that if you give me a minute. I've gotten smart and actually saved searches so I can
smart man.
Get
So
to
I use this as a benchmark when I'm talking to people to describe what inventory is like. And I believe if we're looking at comparison to last week, there were 9 properties, and of those 9, there were really some of those were 100 days plus, meaning that they had some either serious price or serious condition issues. So in reality, it came down to there's like 5 properties on market.
Yeah.
So 4,300 rooftops and 5 properties, and we got a little drum roll for what we are this week. Are you that close?
We're at 11.
Okay.
But I have not looked at them to factor out the ones that are really not on the market, right?
You got one on Ponderosa Lane. Is it Ponderosa?
Yeah. So if you factor
That's
out
waterfront. Woo. It's nice.
So it's very interesting. There's 2 of the 11 that are over triple digits. So that's clearly something's not right there. Everything else is in the triple digit days on market. Everything else is 3. I mean, the median days on market right now is 3 days. Interesting. So basically, I think you're right. You're about somewhere around 9 if you take out those 2. There's 30 pending. 9 on the market, 30 pending. I'm not smart enough to do that percentage ratio in my head, but that's
slim pickings.
Slim pickings.
Slim pickings right there.
The median contract pending price is $349. 5 days on market.
Is this the slimmest inventory you've seen in your neighborhood?
Oh yeah, I mean
since the pandemic.
Yeah, I was like, we
pandemic,
we went through.
We've been hovering.
Yeah.
We've been hovering this number for a while. As I said earlier on an early show, I looked at a 2017 presentation I gave to Fluvanna County in November 2017. There was 57 homes on
I
the
think
market.
30 used to be the average.
30 to 40 units. Look, the developer, the builder in me, the standard answer usually it's about 1% of the total number. That's kind of like a healthy market of every lot there. If that's the case, it's 43, right? If I did the math right. Did I take enough zeros out? 1% of 4,300 is 43. Yeah.
How about for Grayson? Love when you watch the program, North Downtown's finest. So how does Keith think the rest of the year will shake out?
Yeah, so I think this trajectory of buyers coming into the market, regardless of interest rate, unless it gets to that double-digit number, which might have more of a psychological effect, it's just going to keep. They're just coming.
Which again, is not the direction I feel like we're headed.
No.
I got
We want
asked
the
this question that we're now applying to.
Yeah. So, if the interest rates track as Scott has predicted,
And he's been pretty accurate.
he's been very accurate.
Yeah. He predicts in the 4s by the end of the year.
Yeah. So
You stand by that?
I stand behind it.
Yeah.
I think it's
There we
just
go.
a matter of the right data that I feel like is there, but we're not I don't believe is entirely the reporting. I don't believe is legit.
You're talking about
The
unemployment.
job, unemployment. I don't.
But that's been that way as long as I've been doing this for a long time.
Yeah,
Look
but
at it. It's always been a little skewed.
I think it's a continued manipulation of the number is what we're getting, which is now and the inflation data. Well, the inflation data has been skewed to begin with because it was higher than they ever actually admitted it was.
And they're changing definitions and so forth.
Yeah, and and this everybody you constantly hear. Well, most likely a recession is coming, and we may already be in one. And we've got the greatest inverse of the 2-year, 10-year that we've ever seen in it's mind-boggling how although consumer spending stayed high in January, but what we're seeing is that we've seen an annihilation of the U.S. consumer savings and an exponential amount of credit card debt and the largest turnover in auto loans in 10 years.
Yeah.
So how are we not sitting here looking at this data and going, "Oh, shift, we're in a recession already"? Why? These are the things that these numbers reporting are what should be driving the market in the direction that I know that we're eventually going to get to once reality sets in.
Credit card debt, how is that impacting the loans that you're seeing right now? Is it kicking people out or?
So the people that I see struggle with it
Did take care of me on this.
typically
They did
are
We're good.
are common. What I see the same problems. The buyers that I have that we're pre-qualifying, I haven't seen that be an impact to. I think the people who are probably where the credit card debt is really accruing is people who aren't trying to buy or people who are already in a home. Now, and this is something that I cannot stress enough. If you are someone who has gotten into or getting into trouble, it is better to reach out and say, "Hey, I don't necessarily know if I want to do a cash out refinance on my house, but I know that I got to do something. Can you take a look at this and what would you recommend?"
So you're talking about people that are struggling to pay their mortgage. That's what we're talking about.
No.
I'm saying
Talking about
I'm saying
debt
people-
service in
I'm saying-
general.
I'm
Got
saying
it.
people who are starting to accrue credit card debt, who.
And they want to refund.
So I think what happens more often than not in just the mentality that goes into it and the way that the consumer model that we've built in America is that people will go and get into debt trouble and not reach for a parachute
It's quick enough.
And then by the time they actually reach out to say, hey, I'd like to tap the equity in my house, they already can't refi because they've already buried themselves.
Yeah.
And
that's human nature.
And what I'm saying is, if you are someone who is out there listening or know somebody and you have that and having that conversation with them, have them say, hey, just try to get out now before you can't get out.
Reach out to a trusted advisor. It's the same thing if you're struggling, if you should be struggling to make a mortgage payment. Don't hit that 31st day of being late, because it goes automatic in the state of Virginia. Raise your hand. Pull down Keith Smith, Real Talk with Keith Smith. There's trusted advisors in there. Reach out to somebody. I almost got
That's
it.
good.
I almost got it.
You did it. No, I was proud of you.
I muscled my way through
That's
it.
why I smiled. I was proud of you.
To go ahead and...
It's got a website.
You got a website. I wonder, a very well-built
Thank you.
website. And maintained and
Thank you.
constantly growing.
Thank you kindly.
Did I throw enough?
No, you did great.
There
You're doing a
go.
great job.
But reach out, because that's what that's usually what happens, folks. It's human nature. I personally been through it, so I can speak to it on first-hand basis. You think you can fix it, but you can't.
Well, we've never gone down this road here, and the question's been posted on the feed from Sally Coppinger, and she says, how does the cash-out refinance process work?
There you go. Great question.
So the first step is we're going to take an application. We're going to pull credit. We're going to ask you for all the same documents we would in a purchase, W-2s, pay stubs, bank statements. If you're self-employed, taxes. We need to show the same ability to repay as we would through a regular purchase. An appraisal is ordered, and possibly not, depending on how much money we're looking to take out. When the last time it was appraised, that we could get an appraisal waiver. And then it would, right now we'd close probably inside of 30 days, and you would take out up to 80% equity. So that would give you, depending on what your situation and payment is, a reset, and it may help your actual monthly cash flow. If you've got a $1,000 car payment and you're another $2,000 or $3,000 in credit card bills.
That's 20, whatever the heck percent.
At X percent. Yeah. Taking all those payments off the board into one lump sum payment that could be, $600 higher than your mortgage is now, but save you $1,400 a month. It could be. It could really fit the bill for trying to accomplish what you're trying to get rid of.
Good insight. She's got follow-up questions for Scott, and you already answered one. She says, is it the same life cycle, and I think by life cycle, I think she means time, that a normal loan would take to process? And then the follow-up question she also asks is, does it just restart your mortgage clock to 30 years?
You could refinance it 15 years if you qualified for it. And as far as total time, probably the appraisal is probably the biggest turn there, if that's needed. So I would still say, inside closing from beginning to end, from the time that you sign initial disclosures to the time that those funds are executed, you're probably 35 days at the most, and we could probably do it faster than that, but just to give an idea of what your average time would probably be.
That's good. That topic is not discussed enough.
Yeah.
On the show, is the refinance to potentially get some folks out of some debt service issues.
And as the Fed continues to make, I think no decision on the Fed's next move on rates is the headline of the redhead coming across the ticker at the moment. And with that said, that means there's a 25 basis point increase coming. Yeah. They don't think the market can handle 50, but what that means is that's another inch up in your credit card rate.
So cash out makes all the sense in the world.
It could, depending on your situation. I'm not sitting here telling people with 3% mortgages that now's the time to take the equity out of your house and do this. But it's probably better than the 11% that your home equity line of credit is going to come in at. And depending on what kind of trouble you're in, if you can get in and this fixes the problem, it's what's best for your situation is what's best for your situation.
Reach out to
home equity line of credits are at 11.
A friend of mine did one at something around 10, 2 months ago, so I bet they're getting there.
So reach out to a trusted advisor, Scott. They'll do the math for you, right?
Yeah.
And if it makes sense, it makes sense. If it doesn't, it doesn't. And or
Hey, small banks are giving you 5% on CDs right now,
I know, man. A lot of them too.
and
1 year CD at a lot of small banks, 5%.
when was the last time you seen that?
Yeah,
I haven't seen that in a long time.
1985.
Yeah.
1988.
In my lifetime, maybe never.
Well, you're a little older than that.
I mean,
but
85.
yeah.
I was 4. 5% return. I mean, a lot of folks just parking money in a 1 year CD. And they're saying, I don't have the volatility of stocks. I can guarantee 5% return. I don't have to worry about it.
And as soon as the Fed does something different to change that, you pull the money out, put it into the stock market.
Yeah, I mean, I was shocked by that.
Yeah.
This question's come up every now and again. Is Scott processing a lot of stuff in the jumbo space?
Ooh.
Here and there.
Let's
Like-
define jumbo first.
Jumbo, $1 million plus typically in this area.
Got it.
What's the threshold? Is it 7 and change?
Yeah.
But you got to put so much down.
Yeah,
So
yeah.
we're looking at $1 million plus sale, right?
Yeah. I mean, if you're buying something at $1 million, you're putting 20% down, you're definitely jumbo. Probably jumbo would be at 900. What 180 takes you to what 720?
Now, if you're
Jumbo's what 730, something like that.
they just
725.
increased the loan.
Yeah.
I thought it was 750.
I think it's 725, 730.
Got it.
But I mean, you guys are the
We're
pros.
yeah. I remember seeing a
It
750.
moved recently. That's
Yeah.
the only reason.
726, 200.
Yeah, yeah.
725. You called it.
So 900 and change, it gets you jumbo.
Yeah, so a million is where now if you're VA, there is no jumbo. Now it might be called high balance, a number of things, but you can still go zero down at those numbers.
At that number. That's got to be a pretty
Are
tough-
you doing anything in that price point, Keith?
We do. I do a fair number of commercial at that price point, but as far as residentials, yeah, we see it. But our we just was looking at it. Our average sale last year and so far is in the low 4s, that kind of thing. That's average. It's taking some high stuff out, low stuff out on it. But it's pretty much what what our region market is. The average sale somewhere around the 4 range, something like that.
Does two people, some of them you could say are a little bearish. So does Keith really think the inventory is going to pick up as the weather gets warmer?
Well, I think I'm saying it's not. I think you're going to see inventory stay flat. It's not going to. I don't think the inventory is going to pick up enough to make up for the difference of what the buyer pulls out there. I mean, just week over week, we were flat, right? We went from 68 units that came on the market last week versus 72. To me, that's pretty flat. But the pendings went from 73 to 96. So as long as those pending ratios are accelerated, we're not keeping up pace with the units that are coming on the market. So the answer is, I think inventory is going to stay pretty flat, plus or minus a few percentage points. Pendings are going to keep on rising.
This is me asking a question here. I often get your take on how you think the local economy will fare. You got a perspective you want to share with the viewers and listeners on that? And I'm just talking the small business owners that live locally.
So through some personal, I think we're oversaturated in restaurants, and I think that there is a number of small businesses who borrowed money through the pandemic period on the
would agree with
projected
that.
growth that they saw coming out of the pandemic, and that money got turned. Those loans came out of deferment in November of last year, and there are a number of people to where their staffing problems aren't necessarily based on they can't get anyone in the door as much as they don't want to pay any more labor because their profits, the money's not there. And I think you're going to see, I think the first domino to really things getting exposed to where we are is probably another 90 days away to where we start to see some of these small businesses turn over, either where they're forced to sell or they're forced to close in order to, to meet their debt service.
What do you think, Keith?
I'm just looking at what's sold in the first 2 months, over $1 million. I haven't quite figured it out yet. But if you can repeat the question, I apologize. I flaked out here for a second.
What, I mean, do you feel worried at all about local economy, small business owner?
Yeah. So I think Scott's right. I think folks that maybe weren't staying ahead of the curve is probably going to get impacted on it. But at the end of the day, seems like a lot of people going out to eat. The restaurants I go to, people are there. There's a lot of people going in and out of stores on that end of it. I think certain...
Everybody can't be everywhere, and there's winners and losers.
Well, thank you for saying that, because that's what I was thinking. There's going to in every economy, in every market shift, there's winners and losers. There's always is. In 2008 to 2010, I was on the losing side of that equation, on that end of it. So there's always winners and losers. It's how you adapt and move forward with that.
I mean, it's you look at. What do you pay? You're $15 for a burger and fries at some of these places. There's people.
Some more.
Yeah, I mean, people are going. You're going to if people are forced to be more conservative, those options are harder to pull the trigger on.
I feel the same, man.
Albemarle County, $1 million and up, no sales the first 2 months. Nothing is closed.
What do you
maybe
make of
something
that?
impending. Yeah, I just think those homes are just usually take a little bit longer to.
A couple in the pipe that I follow are set to close here. You got one listing in Farmington that's under contract. You got a couple in Glenmore that are under contract.
That's exactly right. I just switched it into pending.
And they should close next month. But I've been following that, and not much activity, man. Not much activity.
No.
Not much action in that space.
Unless it's cash or a lateral move or whatever, at $1 million plus at 7%, depending on what you're borrowing, it's a pretty large monthly nut to go ahead and do that.
How's the how are your agents doing at YRP?
Everybody's doing good. Everybody's pumped, but this is when I've been saying this all along. This is when the pros show up. We're very fortunate. We got a bunch of pros. We coach and mentor them up quite well. So they're going to do well, right? It's just you're going to have to really put your professional hat on. I might get myself into a little trouble by saying this. I'm going to be super curious this time next year to see what the agent pool looks like, right? And I got a suspicion we're going to take a bit of a drop in agents. I was just looking at a national number that Inman put out. So last year, the average agent sold 2.25 units. Now that's average. That takes everybody who does quite well and so forth and so on. That's unsustainable. So I'm really curious to see this time next year if the agent pool changes a little bit.
Any updates you want to offer viewers and listeners, Scott Morris?
So, are we getting to that time of the show?
We can anywhere you want, my friend. It's your call to make, though.
So, we need more stability, less volatility, and I think that's what's going to help solve the inventory problem. Nobody wants to put their house on the market when they don't know what it's going to cost to buy the next one. That's if they're forced to, or through a need, like I'm moving to another state, I need to sell my house. I cannot stand this other human I'm living with. We need to move away from each other. We've had a baby. There's too many humans in this building. We need a bigger building. If you've got those decisions, you're going to pull the trigger no matter what.
So we track our buyers and sellers on why they're moving and selling. We do it informally on that end of it, and 9 times out of 10 it's a life change, right? Retirement, more kids moving into an area, that kind of thing. Do you track that information at all?
I keep track of it do I actually write it down to track it? I do not. I keep track of leads to application to pre-approval to contract. Those are the things that I
I'm just
track.
because we're about ready to come out. They usually comes out in March and April. NAR's stats for the previous 12 months on why they're moving. It's usually a generational, what they call a generational report. I think we're going to start seeing the millennial and the Z's, because that's what we're seeing on the street right now. Are in the market big time. They're not afraid of 7% mortgages at all. They've generally saved enough cash that they can put enough down payment to make it work on that end of it. So I see buyers just coming into the market increasingly. I don't see the inventory going up. I just don't see it.
Andre Xavier, the king of tourism and travel locally, he says at Cascadia, his neighborhood in Albemarle County in the Pantops area, we had 3 homes for sale, and they sold within 30 days at the asking price. One was a single-family, main-level living, 2 bedrooms, unfinished space to make a 3rd bedroom, and it sold for $650,000.
Yeah.
That's a high price, in my opinion, from Andre Xavier. Thank you, Andre, for the comment.
We just need to go back and look at when we had Michael Plecker on the Monday to talk about that particular area.
I believe you have investment property in the pavilions at Pantops, Andre. You got a great spot right there. Those are flying like hotcakes as well.
I really want to build like a community of tiny houses that are not Airbnbs. Like
gotta find the dirt.
Yeah.
And you'll find out that it's actually more expensive. I actually am part of a national cohort that's looking at that, and it actually, Scott, is more expensive to build like a 600 or 800 square foot house than a 1,600 square foot house. It's literally because you're still doing the same infrastructure, the same water, the same roads. It's literally not as cost effective as everybody thinks it is.
Michael Plecker. Here's Cascadia and Pantops, and he jumps in the comment section.
Yeah, there you go.
He said, "Did I hear my name?"
Go. There you go.
King of Pantops, Michael Plecker. We love you. One of the Shenandoah Valley's finest backstops. Gentlemen, 11:30. I enjoy when the band is together. Any thoughts on next Wednesday, Scott Morris? What you got planned?
Is next Wednesday when we're doing the thing?
No, that is not the 22nd.
Oh, okay. Next
That would
Wednesday.
be the 15th.
Next
sir.
Wednesday, I'll be walking in on the button because I've got donuts with Dad at preschool with
Nice.
my twins.
You're gonna feed them sugar. Is that what?
And leave.
Yeah,
Here's some donuts.
best that ever. I love it.
Bye.
So welcome to being a grandfather.
And I'm out.
That was awesome.
Good luck. Shake them up first. It really works much better.
This is the preschool's idea. It's not Scott's.
Yeah.
This is great.
Somebody's not thinking.
Our preschool, which we love dearly, 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 for the last couple years that our oldest has been in preschool, the day after Halloween often turns into a teacher work day. The day after Halloween.
I like that. That's
Literally the day after Halloween.
prior proper planning prevents.
It's poor performance.
Yeah. It was smart by them. I respect it.
So next week, I don't know. I've got a couple people who've talked about wanting to come on as guests. I'll be reaching out to them. We'll get that set up. Got a home buyer seminar in Madison with Julie Garrett from Rappahannock Realty at the Farm Bureau there this weekend. I've got
You got a lot cooking.
Got a lot cooking. I think we can formally say this out loud. Ross Mortgage is now partnered with KW Alliance here in Charlottesville. We are their in-house preferred, so we're
That's the update I was wanting.
getting to see everybody and form some relationships and kind of put some training plans in place, and just really excited to build those relationships.
And any Keller Williams Alliance agents that are watching or listening, reach out to Scott. He solves
got
problems.
some. You got some.
Problems.
Thanks, I appreciate that. We are. Let's see. I've got to find some time to get to North Carolina and do some maintenance on the house down there and kick that off for the year. And by maintenance, I mean I can go fishing.
What's
It's
running
what you
down
tell
there?
your better half.
Everything is starting to like.
about
There's
to say, yeah.
drums starting to
Yeah.
hit. A bunch of puffers. Sheep's head just starting
Have
to
we
show
been
up.
invited to go down to a fishing trip yet?
The last time we talked about his beach house, I think you were redoing the floors, I believe.
That's all been done.
He's busy, man. He's got a lot of irons in the fire.
Yeah, but
so-
we can use the house to go fishing.
Yeah. So that's that's some of the stuff that's going on. The takeaway for if you're someone who is out there looking to buy or sell a home, please reach out, and I will, wherever your location is, we will get you with a team of the right professionals to help you execute a plan to where you are not left wondering what's going on or stressed about the situation. And that's really what it's all about, is having a group of trusted professionals who can help get you through to the end, and you feel confident in the process. And other than that, just go out, do what's best for you and your family, and we're happy to help.
Scott Morris, love it.
Don't think I could add much to that.
That's great.
That was pretty good.
Keith Smith, show's yours.
Reach out to follow off of that or segue off of that. Reach out to trusted advisors. We're all here to help. We're all here to help you get through from point A to point B, and it's going to be a little bumpy, but hang in with us. We'll get you there.
Plecker wants an invite to your beach house as well, and he says he wants some yellowfin. So multiple
Yeah.
people.
I've actually still got some in the freezer.
He's still got some in the freezer for you, Michael Plecker. Friday show as we close.
Just you and I
Very nice.
this Friday. Yeah, I was trying to put together a couple of the police and fire folks, but we're just trying to get on schedules. It's just not working. So we're just going to have a little fun, little Batman and Robin,
Love it.
and see what the feed's got to throw at us, and we'll take it from there.
Yes Realty Partners, Keith Smith. He's a realtor. So if you need to buy or sell a house, he is a realtor. Keith Smith, Yes Realty Partners. Scott Morris of Ross Mortgage, Judah Wickower. Jerry Miller, Real Talk with Keith Smith, presented by Ross Mortgage, online at realtalkwithkeithsmith.com. I Love Seville show in 58 minutes. We can't wait to connect with you. Take care.
Thank you, gentlemen.